How long until you can buy again after a short sale, foreclosure, or bankruptcy? A lot of people ask this question, and it's a great question, and the answer is, it depends. I mean, guidelines are constantly changing. In fact, they recently just changed again. So what I want to do is just go through the guidelines as to what they are today with conventional financing, FHA financing, as well as VA financing. With regards to conventional financing, when it comes to foreclosure, a buyer may purchase a home again after 7 years from the date of the completed foreclosure. If they have acceptable extenuating circumstances, however, one may buy a home 3 years from the date of foreclosure with 10% down and a 680 FICO score. When it comes to conventional financing in short sales, a buyer may purchase a home 7 years from the date of the sale closed with less than 10% down and a 680 FICO. One may purchase a home 4 years after the date the sale is closed with 10% down and 2 years after the date the sale is closed with 20% down. When it comes to conventional financing and Chapter 7 bankruptcies, one may purchase a home 4 years from the date of discharge or 2 years from the date of discharge with acceptable extenuating circumstances. When it comes to Chapter 13 and conventional financing, one may purchase a home 2 years from the date of discharge or 4 years from the dismissal date. When it comes to FHA financing and foreclosures, one may purchase a home 3 years from the date the foreclosure was completed and transferred back to the bank, and less than 3 years but not less than 12 months with acceptable extenuating circumstances. When it comes to a short sale in FHA financing, one may purchase a home 3 years from the date the sale was closed and transferred. Now, there is an exception where there is no waiting period if a borrower had no late payments on any mortgage and consumer debts within the past 12 months preceding the short sale, and they are not taking advantage of declining market conditions. And the subject also may not be in the same geographic location. When it comes to FHA financing and Chapter 7 bankruptcies, one may purchase a home 2 years from the date of discharge with reestablished credit, and less than 2 years but not more than 12 months with reestablished credit and acceptable extenuating circumstances. With a Chapter 13 bankruptcy and FHA financing, a buyer may purchase a home 1 year after the payout period, assuming the borrower has made all the required payments on time. VA financing is much simpler. When it comes to a foreclosure, one may purchase a home 2 years from the date the foreclosure was completed. When it comes to a short sale, one may purchase a home 2 years from the date closed and transferred to a new owner. Again, VA financing does have a clause where there is no waiting period if there are no late payments on any mortgage or consumer debts within the past 12 months preceding the short sale and they are not taking advantage of a declining market. When it comes to Chapter 7 bankruptcy and VA financing, 2 years from the date of discharge. When it comes to Chapter 13 and VA financing, one may purchase a home 1 year after the payout period, assuming they have made all the required payments on time. So there's a quick update on the guidelines. Now, when it comes to extenuating circumstances, those are going to be looked at on a case-by-case basis. The best thing I can recommend to you is if you have any questions or want to get pre-approved for your home loan here in California, give me a call, contact me via this blog post, however you're getting it, receiving it, and let's figure out a strategy to get you back into the housing market. I'm Garrick Wordmuller, and I look forward to helping you, and I thank you for watching this video. Please forward it to any and all people you know who can benefit from it. Share it on your Facebook pages and LinkedIn and all that good stuff, because this is important information that someone you know needs.